after GOP leaders released their plan this morning, President Trump said the tax plan was an early gift from Santa.
I believe we'll have it done before Christmas. I consider that to be one of the great Christmas presents. And not just the reform and not just the tax cuts, but we will be creating jobs like you have rarely seen in this country.
I love money and jobs. So should Americans be even more excited for the holidays, or is this secretly a lump of coal? Let me ask Associate Professor of Economics at the King's College. Brenberg is here to break it down. Bryanomics, how excited are you for the tax plan?
There's some parts of it that I'm very excited about, and there's some parts of it that I think they got wrong. What I love, though, is I love the corporate tax rates. In terms of the stuff that works well, bringing that down from 35 to 20, we have one of the highest.
What will that do? People keep saying that, but what exactly does that do? Explain for people.
Look, it's very simple. You put money in the hands of government, or you put it in the hands of job-creating businesses, and all this does is shift money that was going to the government to go to job-creating businesses. And by the way, it gives them an incentive to do it here instead of overseas. And look, I'm a free trade guy, but I like the idea of investing in businesses here. Give businesses a reason to come back to invest money here. That's what a lower corporate tax rate does. The best thing this does for the middle class is cut the corporate tax rate, because that's investments and that's jobs.
If they did nothing else, is that in and of itself enough to boost the economy?
Well, number two is the small business tax cut as well. So put those two together. I like the corporate tax cut, but the small business tax cut here, bringing that down to 25%.
Yeah. And that's that pass-through rate.
Exactly.
Where individuals who have sort of these sole proprietorships, these corporations, they count some of that on their personal income tax. And now that that rate is lower, what does that do?
And again, it's the same argument that you make with the corporate tax cut. That money either ends up in government's hands, where you know it's going to get wasted, or it ends up in job creators' hands, where they're making investments, putting people back to work. Those two pieces alone are worth doing.
Yeah.
Okay, that's the thing that makes us great. I would say the third thing is they made the really good decision to not do a stupid thing, and that is get rid of the 401k tax break.
And that was a sticking point for a lot of Republicans, those looking out for the middle class.
And it looked like they were going to do something with that. How ridiculous to do that in a world where Social Security is going to run out of money. You're going to get rid of the break that allows people to save money for retirement. No way. So they were smart not to get rid of that. Those are the three things that I really like in the plan. There's a couple things, though, that I don't like as well.
Yeah.
Number one, they won't cut the top rate for earners.
That was one of the issues that I had, and that is because they're worried about the pushback from Democrats, which it doesn't matter because of the way this bill reads. They are able to go through the reconciliation process, so they don't need Democratic votes. So go ahead and lower the top rate as well.
They have given up on this debate. Look, it's rich against poor. That's the Democrat argument. It has been for a very long time, and Republicans said, you know what, you're right. We're going to go with that, and we're going to leave that top rate in place. That means basically all tax conversations we have from here on out are going to be dictated by progressive tax rate terms. Yeah. That's a loss for the American people. It's not about the rich. It's about unlocking their capital, and when you give in on that, forget it. So supply-siders argue you automatically have more tax receipts when businesses are making more money. Well, the idea is you actually generate more tax revenue when the economy is growing. Yes. Businesses are investing, people are buying, so cutting these top rates actually can make sense. Okay, so I don't like that. I also don't like the fact that there are a lot of carve-outs in this tax plan. We were told we're going to get tax simplification. This is the whole postcard thing. The problem is what you're seeing out of the bill already there's all sorts of carve-outs here for property taxes. This is the state and local issue. For mortgage interest deductions, you're seeing that being played with. If you got your mortgage before a certain date, you get the deduction. If you got it after a certain date, you don't get the deduction.
Sounds like it's actually making it more confusing.
And it makes it more confusing, right? We're supposed to get simplification, a broad-based, simple taxes, so I know what I keep and I know what I have to give to the government. That's changing. Lawyers and accountants are going to have no shortage of work as a result of this plan, and I think that's sad, because that's not what we were promised.
All right, what's the last thing?
Last problem here is, how do you pay for it all? I'm a growth guy. I like tax cuts because they spur growth. Yeah. No argument with that. It's not going to pay for itself. We have a budget deficit problem in this country. It's going to lead to a big debt problem.
Of course it is. I mean, you have to cut spending. They won't do that. That's the only way you get honest growth in this country, but they're addicted to spending. All right, so you're a college professor. If this bill were a paper that one of your students gave you, what grade would you give it?
Because of the corporate tax cut, small business tax cut, I give it a B+. I don't like the last three things that we talked about. You can improve it. B+ is worth doing, by the way. Okay. B+ is worth doing. It passes.
All right, very good. Brenberg, thank you so much.